All right. With Bitcoin crashing from 109 down to 80,000 very fast. Is Bitcoin dead? That's what we're going to find out today. We're going to look at some charts, we're going to look at some history, and we're going to say, is Bitcoin dead? Or is this one of the greatest buying opportunities currently available? So let's dive in. What we're going to do is we're going to take a look at some charts, and we're going to say, is a drop like this unheard of? Or has it happened multiple times in the past? Okay, so we're going to look at this cycle and we're going to look at some past cycles. All right, now what we've done here is let's zoom this out. Okay, and what I did is identified in this purple line here was the low of when we went from a bear market and when we flipped over to a bull market, just meaning which direction is the upward trend going, right? That's it. Just keep it simple as that. So here is the bottom, and as you can see, we've been on this upward march, okay? That is the macro look at the bull market. This was right around November of 2022. We're seeing a theme of November after having the year after the halving being low. Anyways, take a look at this. This is an upward trend. Nobody can deny that, right? This is an upward movement. And guess what? There was a drop from here to here that was 22%. But guess what? We kept marching upwards, okay? We got around here. This dropped from here to here. This was 21%, okay? Right now we're at a 24% drop. So that's not unheard of. And guess what? We kept marching forward. Then we moved up here to 73 and we dropped down to 48, 49. Guess what? That was a 33% drop. And we shot up. Now we're at 109 and we're down to the low 80s. 24% drop. Now the question becomes, and we're going to address this later on, these cycles do turn around, right? And there is going to be peaks and there are going to be valleys, and then we're going to move into a bear market. We're going to take a look at some indicators here in a moment of, are we truly in a bear market, or is this just another one of these drops, goes higher, drops, goes higher, drops, goes higher? Okay? That's what we're going to take a look at. Now, let's not just look at this cycle. Let's look at the past cycle. So this cycle, and this is on the 1 week candle chart. This goes back to, let's see, the last time we went from a bear to bull was in March of 2020. Makes sense, right? And that's just ballpark. And guess what? Let's take a look at this again. We move up, right? We go from, where are we at here? About 4,000 up to 12,000. We drop down to 9,000. 20% drop. Then we've got this long extended run, right? All the way up to about 40,000. And we drop down to 29,000. 29% drop. Then we run all the way up to 58,000. Then we drop down to 43,000. 26% drop. Run all the way up to 65. Drop to 46. 27%. Make a little comeback to 59. Drop 50%. But the cycle wasn't done, right? Another drop, 29%. We keep coming back up towards the double top, 25%. And then we reach that double top at 69, right? This is an upward trend with 1, 2, 3, 4, 5, 6, 7 different 20% plus drops, okay? It's volatile. This is what it is. Now, has this happened again? Let's go back. Let's take a look. We're going to go all the way back now until the previous cycle. And we're going to say March of 2017. All right, we're going to take a look at that. Now, we are on an upward trend, right? We're sitting right here around $700. We get up to 3,000. Drop down to 1,700. 38%. Okay? 4,900. Down to 3,000, 37%. You see, you get it, 8,000 to 5,300. You get it. Multiple big drops, larger than we've seen so far, right? In the 30s to 40s percentile. Again, these are upward trends. All right, so multiple 30 plus and I mean, obviously there's more, right? And it depends on what scale you look at and time frames. But anyway, multiple 30 plus in 2017. Multiple 20 plus, right? We're in that 20 to 30% range of drops in the last cycle with that. We had that kind of double top. That was 50% before we came back. So you remove that, we're in that 20 to 29, 20 to 30% in drops. Guess what? This cycle, 20 to 33%. We're in that range. This is a natural range for this to happen. Now, let's go, I don't know, let's get crazy with it. So 33% is a big drop. I'm not going to go to the 51%. Let's go to, what's another? 38%. All right, let's take a look at 33% and 30. Yeah, let's look at 33 and 38%. All right, so let's take a look from this high here, around 109. How far do we got to go? 33% gets us to $73,000. Okay, guess what? That is a resistance level. We were stuck right here. Look across this chart. That was the previous all-time high. We hit it 1, 2, 3, 4. We hit it multiple times. Okay, so that is now going to be a support level. So could this drop all the way down to 73 and still be within the range that we expect it to be? Sure. I don't feel like that's going to happen, but that could happen, right? A 33% drop, which we've obviously seen before in this cycle, in this current bear cycle, or sorry, bull market, in this current bull cycle, has happened. And it actually makes sense if it goes to 73 because that's where we had the resistance to break free of it. So from a technical analysis standpoint, could happen, right? 38%, I don't know. Now we're just making up numbers based on multiple cycles a long time ago. 66, I don't know. I don't think there's as much clear insight into that number popping up. But yeah, we could see all the way down to 73. Don't feel like it's going to happen. Even if it does, now the question becomes, is that 33% really just the start of the bear market? Or is this just part of a trend that we'll come back from and we'll make higher highs? Let's take a look. Now what we're going to do is we're going to flip over to BitBo. Really like a lot of their charts. So I'm going to scroll down here to some of the indicators. Let's go to one of my favorites, the Pi Cycle Top Indicator. Can you guys, let's make sure my video's out of the way there. All right. So what we're going to look at in yellow is Bitcoin's price. And we have the 111-day moving average and then the 350-day times 2 moving average. What this has proven in the past or shown is that when these two, the shorter and the longer term moving averages cross, is typically when we have we have peaked at the top. Okay, so you can see here, they cross right around here. That's the price peak. Okay, let's go to 2017 or 2018. Right here, you can see that they cross. That was also a top. Let's go here. Look at, they cross. That was a top. Even though we got the double top, it's logarithmic. This was technically the top within here. So the question then becomes, if this is the change from the bull market to the bear market, not just a 20 to 30% drop, what is this? Is this the top? Sure does not look like it based on the Pi Cycle indicator. These need to cross, and there's a lot of room for those to cross over. Okay? So let's take a look at another chart. So the Pi Cycle indicator says, no, this is a natural volatility in the market. Things are fine. I mean, fine's all relative. But is this the end of the bull cycle? That's saying no. No, it's not. Let's go to another one. We're going to go to the MVRV score. All right. Anytime we get within this red range here is typically when we are going to peak And this is the price. You can see here once we got up, dropped down. Did not stay there long. Once we got up into the red, dropped down. Did not stay long. Got up, dropped down. Did not stay there long, right? These were sharp reversals when we got into this red bar here. Look at how far away we are from getting into this red bar danger range. Plenty of runway left. Okay, so those two indicators have said this is natural, this is volatility, this is how the price goes up, this gets lettuce hands out, it creates more diamond hands, more holders means less less liquidity, right? So as people start to buy, there's less to buy, the price is going to go up. All right, let's take a look at, let's see, we got another one here that we want to take a look at here. Let's take a look at Mayor bands. All right, you can see here, we've peaked out in the red zones, okay? Every time we've touched those red zones, we've peaked out. We're not close to those again over here. Now this chart is a little tighter, but again, we're not close to these red bands on currently where we are, all right? Again, it says that there's still more runway to go in this cycle. All right, let's look at one more, and then we'll call it golden ratio. Again, now this one is looking at when we get into this golden bar area here is when we get to our local tops. This one, the most recent one, last cycle only got into the blue. Guess what? We're not close to the blue. We're 3 or 4 deviations from the blue. What I am saying is that this is natural. This is part of Bitcoin. It's healthy. And you need to have these drawdowns to have these big price jumps, because guess what? Following a 22%, we had, well, let's just have a little fun here. Following 22% down, we had 78% up, okay? Then we had another downtrend. Let's see where it came back from there. We had 93%, all right, from the previous bottom. Okay, to the top, 124%. What happens after these? You get these flush outs, consolidation, these big run-ups, and then you have to have more consolidation, and then it starts over, and then we're going to have another big run-up. So be patient, be convicted, do more research, study more history, so that you can increase your conviction. And these are viewed, in my opinion, as great buying opportunities, because based on all of the indicators on where we are in the bull cycle, we continue to be in a bull market, and this is not turning to the bear cycle at this time. All right, keep stacking those sats. If you like, subscribe and like below. Enjoy and be vigilant and ready to jump on these opportunities. Thank you.